What's one of the fastest ways to get to $1 million net worth in today's economy? How does banking play into this? How does relationship banking play into this? How do I select the best bank, and how do I structure that banking relationship in order to get myself to $1 million net worth and beyond in the fastest time frame possible? I'm going to cover all of that in this video. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Once you like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity. The objective of this video, as stated in the intro, is to get you exactly the information that you need on how you can use your banking relationships to get yourself to a 7-figure net worth and beyond in a very short span of time. I'm going to teach you exactly why banks are so important to getting to this goal, how to select the right bank, and then how to set your banking relationships up to do so. Banking is integral to increasing your net worth and your overall finances altogether. And why is that? Because banks are literally the center hub of every dollar owed to you and every dollar you owe to someone else. That means pretty much every dollar or any significant amount of the money that you're going to earn is going to have to most likely flow through a financial institution, and any money you're likely going to push out or distribute out for, payments, bills, and anything of that capacity is going to have to pass through yet again a bank. So that means that every single dollar in your possession, or the vast majority of the dollars in your possession, before they can turn into any other value in the marketplace, before they can turn into real estate, stocks, a business, anything else, they're going to have to flow through and likely sit in a bank account. So it is very important that you have your banking relationship optimized in order to make sure every dollar coming in and going out is putting you in the best financial position possible. So with that out of the way, how do you select the best bank in order to start this banking relationship so you can start growing your net worth? What you want to do is take the time out to build out at least a skeletal framework of your financial plan. You're not going to do the greatest job at this unless you're already some kind of financial professional, but the objective is not for you to be perfect. It's for you to basically have a framework somewhere of a starting of where you are and a pretty decent idea of your end game financially, or at least a big target goal that you have. So the goal of this is for you to be able to take this and then properly select the features, benefits that you're going to need from a financial institution to get you from point A to point B. So the first thing you need to do is figure out exactly what your financial position is right now. You need to be auditing and optimizing your income. You need to be figuring out how much money's going out. You need to be figuring out where your credit is. If you're starting from scratch, if you years deep into it, where are you? Are you closer to your retirement journey? You need to be figuring out exactly where you are and what resources you have available to you right now. And then you need to be turning around and figuring out, what is my end game, or at least what is my next major goal? Is it starting a business, buying a home, investing in real estate, investing in the stock market, expanding existing investments? What is your big goal? Planning for a child, planning for a wedding, whatever the case may be. You need to figure out what a handful of your biggest goals for the foreseeable future are. Why? Because again, you need to figure out your 2 points of contact. You need to figure out where you're starting and where you're headed. And from there, your banking relationship is going to bridge those two together. Now, once you have that laid out on paper or laid out in your phone, however you choose to build that out, now you want to start shopping for financial institutions. And obviously, if you're an adult watching this video, you probably already banked somewhere. So you can now audit your existing financial institution now that you have the education in this consultation in this video. And you can start shopping other institutions in the process once you figure out if your bank is a good fit for you or not. What you're going to be doing now is going online, making phone calls, or going into institutions, or some combination of all three, to start figuring out, okay, look, this is where I am financially. How can this financial institution get me over here? That is their job, believe it or not. Many people don't understand this, but most financial institutions they have branched out beyond the transactional basis of just, pay and receive and getting your money in and out of, in flow. The banks are being way beyond that now. Banks are now the center hub for financial activity. This includes any type of investing, legitimate investing, that is, insurance, even some forms of estate planning. A lot of this is done in connection to or through financial institutions and banks. They have cornered that, entire financial sector within their structure, within their entity. So you are going to basically take your point A and your point B, bring it to a financial institution. You're going to do this by looking online, making phone calls, again, and meeting with bankers in person and saying, okay, look, this is where I am. I need a bank that's going to help me get here the fastest. And that the job of that banker or the research you're looking for online is going to be built around, what tools they have available to help you accomplish that. Once you started to do that process, what you're looking for now is to layer out the standings of that relationship. You're going to be figuring out, first off, your immediate financial needs from that financial institution: checking, savings, CDs, retirement accounts, whatever the case may be. You need to have a general idea of what you're going to need immediately from that financial institution. I need a direct deposit. I need features that allow me to transfer money in and out to other people or to other institutions, other banks that I'm banking with. I need somewhere where I can check my credit score within my banking app. I need this feature, that feature, this feature, and that feature. I need something that gives me a digital budgeting tool that tracks my spending and helps me somewhere I can go and take an immediate look at my budget without having to break it all down myself. These are the types of things you need to have a reasonable understanding of what you need. From that point on, now you've met your immediate needs. The next thing that you need to focus on is, what optimizing features do I need? I touched on these already. These are generally viewed as convenience products. Do I need mobile deposit? Do I need the ability to do Zelle? Do I need transferring features? Do I need bill pay features? Or on the other side of that, do I need high yielding savings accounts, high yielding CDs? Do I need investing products? Do I need retirement account products? Business banking, home lending. Do I need an institution that offers a plethora of financial loan products? Do I need an institution that offers credit cards? And what type of credit cards? You need to understand this because every single financial institution is unique. At the end of the day, they are offering different benefits, features, and services based on a variety of different factors, and their business models are built around these things. They're built to cater to certain clientele. Every bank is not for everybody. So you need to have an understanding of this. And once you layer out the immediate needs of money going in, money going out, money being stored, then you need to branch out into how to optimize every single dollar. So you need to be focused on convenience products that's going to allow you to more efficiently send your money back and forth, earn on your money, invest your money. This is very important. Once you have this under control, you have a picture painted, you have a banker or a professional who's guiding you through this process. Now you need to be wealth planning, taking the first two layers that we just laid out and saying, okay, from this point on, now I know my ultimate or my next major goal is this over here. So I need to start bringing all of my financial picture together under one roof, or as close to under one roof, and consolidate that as much as possible and take a full look at where I am and what it's going to take to get where I'm trying to go and the time frame I'm trying to get there. Once you have worked with a financial professional and you yourself have come together and put this picture on paper, now this is where the magic starts, because you are going to start leveraging all of the financial products that this institution or possibly a couple different institutions have to offer. So an example of this is going to be, okay, now that I know that my goal is to retire in 15 years, I want to retire early and I want to use real estate investing as that vehicle. What you're going to need to do is work with financial institutions who offer the proper deposit products that allow you to optimize your deposits and then turn around and offer you the financial tools to make sure your credit is built properly and optimized. So this is going to be personal loans and credit cards and a variety of them that you can build that relationship within that one or two institutions and build your credit profile at the exact same time without spreading yourself out too thin. Now from there, they have all the data they need on you, and you've built up the data points you need to graduate into the real estate investing journey with great credit, great deposits, your paperwork's in order. All of this is now clean and optimized. So you see how you can start to be so much more efficient going into a journey like real estate investing. Now this financial institution hopefully offers the loan products that you're typically going to need, or maybe even has a footprint in the real estate market you're looking to invest in, because they're going to be so much more willing to make loans to you in real estate markets that they already operate in and that they're familiar with. These are going to be perfect loans for them to hand out to you as a client. So this is how you start to optimize. If your goal is stock investing, it's the same concept. You're basically going to say, okay, I need my deposit side optimized. Once that has been accomplished, now I can graduate over into focusing on making sure that I have the savings and graduating to investing in a portfolio and putting a portfolio together and working with a professional to optimize a portfolio, doing my estate planning and making sure I have the proper amount of life insurance. This is honestly two things that you need to have done before you dive too far into investing. And most financial institutions either directly are offering some form of these services, or they're partnered very close with other firms and institutions that offer these different services. So again, you're keeping this all in-house. And this provides the data points these institutions need to start throwing everything but the kitchen sink at you when it comes to borrowing money at great terms and great rates. Because at the end of the day, leverage is the key. Leverage and fluidity when it comes to finances is the key. So basically your money being able to flow efficiently, and you keep as many of those dollars as you possibly can while having the lending products to leverage into your different investments, growing your business, growing your income. So again, to quickly recap, your banking relationship is essential to developing a strong net worth and a strong financial position. Picking the right institution is essential, or right institutions, because you're going to be looking at these institutions not only to pay and receive or get your direct deposit and pay out, but you're going to be looking at these institutions for their ability to help your money flow efficiently with the lowest fees possible. That's going to give you the best earnings on your money, help you build and maximize your credit, and then help you have the financial products to either start, grow, and launch a business and or invest, whether that's real estate or the stock market. You're looking to get as much of this in one financial institution, or just maybe a couple financial institutions, as you possibly can. Once you have this laid out, you're going to optimize that relationship. Every single dollar needs to have a purpose, and every single dollar needs to be efficiently earned and deployed. Minimum fees, wiping out as many fees as you possibly can. Best flexibility, meaning that you can transfer your money as fast as possible, as efficiently as possible. And you need to be able to get the best earnings on your money. And then from that point, you graduate into growing your income through business activity, freelance activity, that business banking relationship, allowing you to expand your business while building your personal credit, developing your business credit, and then graduating all of that efficiency into investing and letting those investments get you to your goal. I'm grateful that you guys tuned into this video. Hopefully you got value, took some notes down, and you revisit your existing banking relationships and also start to shop out for new banking relationships. Because as you can see, this is just a breakdown. I didn't put many numbers in this. I'm going to do a video like that very soon where I start to put numbers down on this so you can see how fast and efficient this can be. But I wanted to give you the framework and the structure first, because again, relationship banking is essential. As always, I appreciate y'all tuning in. This is JP from Blueprint for Prosperity, checking out. As always, stay focused, stay in motion. I'll see y'all soon.